Intel's stock is up more than 20% since the announcement of its new CEO, Lip-Bu Tan. But the big question is, can he actually turn the struggling giant around? While other semiconductor stocks like AMD and Nvidia are doing better than ever, Intel continues to fall behind, losing market share and bleeding money in a booming industry. It is truly a tough position for a company that once was the king of chips. In today's video, we'll dig into what's really going on with Intel. We'll break down the company's financials, talk about the challenges it's facing, and see if this could be one of the rare turnaround plays in the semiconductor space, or just another value trap. But you know what's not a value trap? The like and subscribe buttons. If you enjoy my content, consider helping the channel by clicking those two buttons. Thank you. Now let's get back to the video. Despite being a legacy name in the semiconductor industry, Intel has been falling behind, and not just in stock performance. The problems go deeper than most realize. First, there's the delays. Intel has consistently struggled with executing on its product roadmap. While competitors like AMD moved aggressively to smaller, more efficient 5nm and 3nm chips, Intel got stuck transitioning from 14nm to 10, a delay that cost it years and gave its rivals a massive head start. Secondly is their manufacturing missteps. Intel has historically prided itself on being both a designer and a manufacturer of chips, a model known as IDM or Integrated Device Manufacturing. But this vertical integration became a weakness when their fabrication plants fell behind technologically. Taiwan Semiconductor, which AMD and Nvidia rely on, pulled ahead as the go-to foundry for advanced chips. Their third issue is their declining market share. Intel used to dominate the CPU space, but today AMD has been eating into that share across consumer, server, and laptop markets. Even Apple ditched Intel chips in favor of its own silicon, a blow to both Intel's reputation and revenue. Fourth is financial pressure. Intel's margins have been shrinking. The company is spending heavily to catch up, investing billions into new factories and research and development. But it's not translating into strong earnings yet. In fact, Intel is posting net losses in recent quarters, while its peers are hitting record profits. And finally, it's the perception. In tech, momentum matters, and right now, Intel doesn't have it. Investors see it as slow, bureaucratic, and out-innovated, a legacy titan struggling to stay relevant in a rapidly evolving field. So while the stock may seem cheap on paper, these structural and strategic issues explain why investors are cautious, and why Intel has been underperforming in a booming sector. Now that we've covered the key issues holding Intel back, let's take a closer look at the numbers. How bad is the situation financially? And is there any light at the end of the tunnel? As you can see, the company is up around 20% year to date. However, if we would look at the longer 5-year picture, it looks much worse, as the company is down more than 60% in the past 5 years. The company is currently trading at around $105 billion market cap, with a net debt to EBITDA ratio of 3.5, which is considered a bit high, and we would prefer to see it under 3. However, it's not completely terrible. As you can see, the company is not profitable, as it's trading at a negative PE ratio. However, it seems that they're planning to become profitable next year, as we see a forward PE ratio of around 50. They also have a negative return on invested capital, which I really don't enjoy, as it says that the company is doing a bad job in investing their money. Looking at their detailed financials, they are currently showing lower revenue than they had in 2014, and it has been shrinking consistently for the last 3 years. When it comes to net income, we can clearly see that last year they did a terrible -19 billion. And again, we don't see any good progress in the recent years, showing the company's struggles to adapt to the rapidly changing semiconductor industry. Looking at their free cash flow, the picture is even worse. They had a negative free cash flow for the last 3 years. And this is because they are doing major investments trying to catch up to their competitors. I understand why they are doing that, but I am not sure if this will bear fruits. At the same time, while we know that their competitors are growing their profit margins, we see that Intel's margins are shrinking, clearly showing that Intel is struggling and that it's becoming harder and harder for them to earn money from the same chips they are selling. Looking at their shares outstanding, we see another interesting thing. From 2014 to 2021, they have consistently bought back shares, increasing ownership of their investors. However, in the last 3 years, they started issuing shares and diluting their owners. Another bad metric. Now let's see what analysts are predicting for Intel. Analysts predict that Intel's revenue will grow less than 10% in the next 5 years. However, they do see nice profitability coming back their way, going up to almost $15 billion in year 2029. We see a similar picture when it comes to free cash flow. Are the analysts correct? Well, they might be. However, I am fairly skeptical, as Intel has a track record of underperforming. After going through Intel's financials, honestly, it's hard to find anything positive to say about the company. Almost every key metric looks disappointing, revenue is shrinking while their competitors are booming, they're not profitable, and they're burning through cash like a college student who discovered Uber Eats for the first time. Sure, they're trying to make a turnaround, but let's be real. Intel has been trying for years, and their results keep disappointing. Investors have been promised change again and again, and so far, it just hasn't happened. Maybe Lip-Bu will finally be the one who turns things around. But I remember hearing the same hype when Patrick Gelsinger stepped in, and today the company is in an even worse position than it was back then. At some point, Intel has to be held accountable for its performance. And until I see real tangible improvements, not just promises, Intel is a really easy skip for me. If you're curious how Intel's competitors are doing, I've also reviewed AMD and Nvidia, two companies I used to think were way overvalued. But recently, the picture has started to look way more interesting. You can find those videos linked in the comments below. But what do you think? Will Lip-Bu finally turn things around for Intel, or will he be just another CEO riding the company downhill? Leave your comments in the comment section down below. If you enjoyed the video, consider hitting the like and subscribe button, as it does help to grow my channel. And as always, guys, thank you for watching, and I hope to see you in the next one. Bye.